Morning, Steve Reed in Chicago with the morning grain comment. Grains are mostly lower overnight, led by corn and wheat. Again, headlines out of Bloomberg that the Russians could open 7 corridors for Ukraine exports is offering resistance to the corn, wheat, and soybean oil market. Again, yesterday it was a Reuters article that came out, but Russians said there has to be some reduction of sanctions to get them to open up the corridors. And we're still dealing with the Ukraine ports mined, and also some of the infrastructure damage that's been done to the Ukraine export elevators and rail and even truck to get grain to there and get vessels in. So again, I think that when we look at the corn market, at 760, the 50-day moving average is at 770, and I think that is at the lower end of a trading range and where value is. July wheat's 11.21. 20-day moving average is 11.42. Support's at $11. And again, that 11.40 area is probably value at the lower end. Kansas City, 12.13. 20 days at 12.20. $12 is support. And again, I think that overall, a drop in the hard red winter wheat crop is probably going to help the markets move up to that above that 20-day moving average. Minneapolis wheat, 1276. The support is at 1263. And I think the fact that it's still raining in the northern plains and eastern Canada supports the Minneapolis futures. It did announce that USDA ag agitation India lowered the wheat crop to 99 million tons from 108.50. U.S. Northern Plains, Great Lakes, and some of the Delta is going to remain wet. Southern Plains could eventually dry out. Looks like early June, we might see a little bit of a change in the pattern, drying things out in the Midwest, but keeping things wet up in the Northern Plains. And so if I'm a corn or bean plant and I'm planted, that's probably a pretty good forecast. So we'll just see what June and July weather brings for the crops. The China announced that their economy is slowing. These COVID lockdowns is probably going to reduce their soybean oil demand and maybe even soybean imports. Trade volume and everything is down as we enter the long holiday weekend with the CBOT closed on Monday. Down in South America, Argentina is talking about maybe some export taxes. Brazil FOB soybean basis continue to rally. Matif rapeseed 7-week low on the possibility of Ukraine sun oil being shipped. And domestic corn and soybean basis remain very strong, both for domestic crush demands and also from the export standpoint. Indonesia announced that kind of uncertain on their palm oil export ban. They are going to audit all palm oil companies and require that they move the headquarters back onshore versus some that are in Singapore. So again, kind of watching outside markets, money flow, the weather obviously, and then what's going on in the Black Sea. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.